The morning report for the 18th of May 2010. What seemed to be a pretty steady night overnight in the US market was not. It was a very volatile night with the market opening strong and then pulling its way back down to even. So it closed where it opened. Though it seems a lot happened, it certainly was a volatile marketplace. Now the Dow Jones closed at up 0.1%, S&P 500 the same, and the Nasdaq up 0.4%, closing at 2,355. The FTSE was again closed down 0.01%, so down 0.3 points to close at 5,263, and our market dropped 3% yesterday, closing at 4,467 points. Now we expect to see a small gain today, maybe up 0.5%, getting us back above the 4,500 level. But there's obviously a lot of concern out in the marketplace right now, obviously regarding sovereign debt in Greece and regarding the super tax coming through for major miners and possibly through for anyone who digs a hole in the ground and into the banking sector over time. This is going to hit our market fairly hard, and this uncertainty that the government have portrayed is certainly shaking things up a little bit and stunted the return or the growth we've seen in the market the last 12 months. So certainly I sit back now and pick up those good blue chip stocks that are paying nice big fat dividend yields and watch out to see what happens in the coming election. The gold price was steady, closed at $1,228 an ounce. Oil was down 2% to close at $70 a barrel, and the Aussie dollar dropped below 88 US cents, closing at 87.8 US cents. Now, other news coming through is AMP, AXA Pacific, and MLC and the National Bank will stop taking sales commission on superannuation, pensions and investment products as of the 1st of July this year. Now this is a big move. It's moving 2 years before the scheduled government change, and certainly the banks don't do this sort of stuff for the clients. I haven't seen a bank drop its fees in many, many years, and certainly haven't seen a bank drop its cost base without something in it for the banking sector. So I'm a little bit skeptical on these guys dropping their fees. I think personally it's a publicity stunt, and I'll keep my mind open until I see how the sales commissions will come through and how it's going to change from what's happening right now. But these guys were the biggest perpetrator of charging ongoing commissions, charging exit fees, and certainly the guys who charge the most fees. They look like they're leading the pack, but again, always concerned with the motives of large banks. For more information, go to our website at growyourwealth.com.au.